Good morning, everyone, and thanks for joining us here for our special program on the Paycheck Protection Program, talking about round two and everything you need to know to be able to apply for this. I'm going to do a few introductions as we start. I will ask everyone that's an attendee, please keep your microphone muted. We will have time at the end for questions. You can also post your questions in the chat. If you're watching us live on Facebook, you can post that in the comments and we'll get to your questions. But we have three speakers today. We want all three of them to kind of talk first, and then we'll go to the question and answer after they're done. Let me introduce our three panelists for today. Leading off today will be Greg Tucker. Greg is the State Director of the Missouri SBDC. He's going to kind of give us a high-level overview of the PPP program. He'll be followed up with Ryan Campbell, who's the Director of Commercial Administration with Community America Credit Union. Ryan's been involved with a lot of the applications for his organization, knows a lot about that process. And then finally, we'll wrap up with Sansi Bleckinger from Central Bank of the Midwest. Sansi will talk a little bit about her experiences as a commercial banker and what she's seen via the first round and kind of what we can expect during the second round. So I'm going to turn it over to Greg. Let him talk first, and he's going to do his little screen sharing here. And let me get his video up here. And Greg, I'll let you take it over.
Okay. Thanks, Tom. I appreciate the introduction. As Tom said, I'm Greg Tucker with the Missouri Small Business Development Centers, and I'm going to give you a very high-level view of the PPP program. So a little background, everyone knows Congress passed the COVID-19 Emergency Relief Bill on December 21st, 2020. President Trump signed it into law on December the 27th. On some of these programs, we are still awaiting SBA and Treasury to issue some rules and governance and forms on some parts, but for the most part, a lot of it is out in the public now. So a part of the relief bill continues three programs that were began back in March with the initial bill: the Small Business Debt Relief Program, which is an automatic program where the SBA actually makes payments, SBA loan payments going forward, and that was revised in this program to begin again in September. The second is what we're here to talk about today, the Paycheck Protection Program. And that is actually a loan through a bank, and you will apply for those loans through participating banks, two of which are on here today. And then the third program is the Economic Injury Disaster or EIDL loan with the Emergency Economic Injury Advance. That is an actual loan from the SBA and the Treasury. To apply for that loan, you would go to sba.gov/disaster. The Paycheck Protection Program was revamped with $35 billion set aside for first-time borrowers and $15 billion set aside for employers with 10 or fewer employees or for loans less than $250,000 for entities located in low-income neighborhoods. The PPP program is open now through March the 31st, 2021, or until the new funding is exhausted. For new PPP applicants, the loan process is mainly the same as it was in the beginning. Some of the technical aspects have changed that I'll touch on in just a minute, but the loan application is basically the same. There is a simplified process for loans less than $150,000 for both the application and for forgiveness. Eligible entities in the PPP, of course, for-profit businesses, certain nonprofits, and those are primarily nonprofits that don't engage in any type of lobbying, housing cooperatives, veterans organizations, tribal businesses, self-employed individuals, sole proprietors, independent contractors, and small ag co-ops. In this round, specifically 501c6s or chambers of commerce are eligible. Local news and media organizations, as well as housing cooperatives, and all may be newly eligible for a loan. The one caveat to the program is that the business did have to be in existence on or before February the 15th, 2020. Included in the Paycheck Protection Program now are costs for personal protective equipment and adaptive investments to meet state and local guidelines. So those businesses, we always think of restaurants, for example, they had to create some type of outdoor structure or some type of modification to their business to serve through a new business model. Those investments are now, you're able to include those in your PPP program loan application. Farmers and ranchers now use gross income in 2019 versus net income, and that gross income is reported on Schedule F, and farm credit system institutions are now eligible to make those loans. So that's a small change for the ag businesses. Seasonal employers now have greater flexibility in determining which 12-week period they use in 2019 versus 2020. Property damage costs related to public disturbances during 2020 that are not otherwise covered by insurance or any other program are also eligible expenses in the PPP. And a big change is forgiven PPP loans and proceeds now are no longer to be included in taxable income. So that was a big change. Before, the PPP loan could be included in taxable income. Again, there's a simplified application process for loans less than $150,000 with a one-page forgiveness certification. However, in case of an audit, records are recommended and required as a backup. Another big change, the EIDL advance no longer needs to be deducted from PPP forgiveness. Before, the actual EIDL loan up to $10,000 had to be deducted from the PPP forgiveness. In the new PPP second draw program, that is no longer the case. Very briefly, the economic injury disaster loan, there is another $10,000 advance or grant. It's going to be different from last time. I'm still looking for a little guidance on these grants. I'm told that SBA will be reaching out to those who did receive grants last time to look at the possibility of taking those grants from whatever the company received up to the maximum of $10,000. Again, I haven't seen final rules on that yet. There's a priority with the EIDL of businesses with fewer than 300 employees located in low-income neighborhoods and who have experienced a 30% reduction in gross receipts during any 8-week period during March 2nd and December 31st, 2020, compared to the same 8-week period the year before. If a business receives a grant, that business can reapply, but now I'm told that the SBA will reach out to those businesses. And again, the advance does not need to be deducted from the forgiveness. One of the changes too that I neglected to put in this presentation is the amount of the PPP loan is still 2.5 times the average 3 months of wages in 2019, except for those restaurants and those businesses in NAICS code 72 hospitality businesses, which can use 3 times their average payroll of the year before. And that's my presentation, Tom.
Greg, thank you. Question for you. Explain to me the role of the SBDC offices here in the state. How do they support businesses on this program?
So we work with a lot of independent, actually we provide a lot of training and a lot of webinars, Tom, across the state related to the programs. We do a lot of education as well as help a lot of people get to what we find a lot of our clients don't have a relationship with the bank. So we help maybe develop some of those relationships early on or get them into the SBA's lender match program, where the SBA will give a list of lenders who participate in a certain borrower's area. But we provide a lot of technical assistance to help people understand the questions before they might go to a bank. We do encourage everyone to apply and get in the queue as quickly as possible, but we serve that technical assistance service on the side.
And here in Kansas City, our local office is at UMKC, correct?
Mm-hmm, down 4747 Truce Boulevard. And then we have a couple of people. We have an office also in St. Joseph, and then we have a couple of specialists. We have actually Jackie Edson, who's in your area out in the Independence area as well.
Yeah, Jackie's actually on the call today. Listen.
Oh, I see her now.
Yep. Thanks, Greg. Let's go over to Ryan Campbell. And Ryan, good morning. I know before we started, you were talking about during the first round, you guys had about 1,400 applications for PPP for Community America. Is that correct?
Yeah, we did about 1,400, just under that, and the first couple rounds. So the first round started in April. We went through August when they extended that program. So I'll just kind of jump in a little bit about the application process. A good resource is the SBA.gov site. They have a page set up specifically for PPP, SBA.gov/PPP, and on there you'll find links to the forms, the frequently asked question documents, their high-level overviews, both for borrower and lender. One thing that I find is helpful is to review both of them. So even if you are a borrower, to review the lender document, because it actually explains what the lender's looking for, and the things that are going to be required from the lender. So that gives you the ability to have that step ahead, as you're looking through both of those. So again, they did release the actual form documents. They are 2483 was the original form. They've revised that now, and they also have a new 2483-SD for second draw. And that's the information that the borrower is going to need to fill out, the application that the borrower is going to need to fill out. A lot of financial institutions are taking that application exclusively electronically, either through a portal that they've set up or through their online banking platform. So reach out to your financial institution to figure out the best way to apply. I think some are still accepting paper applications, but a lot are using the electronic formats. And that allows the financial institution the ability to take that data and effectively and efficiently transfer that over to the SBA. So it comes in, and I'll just kind of briefly describe our process. The borrower would apply for that. It would come into our portal. We have a team that's reviewing those applications. And then once we've reviewed, we've confirmed that all of the documentation, calculations are accurate, then we are able to submit that application electronically through the SBA's API system, which is the electronic format of us being able to just exchange that data. So there's not a lot of rekeying things. It reduces the opportunities for errors. And we're just really taking that borrower application data and submitting it to the SBA. Once the SBA has it, this time it's a delayed approval. So originally in the first program, it was just an instantaneous. Once they get everything, they would submit back with a loan number. This time it's going into a queue. They're reviewing those applications, really drilling down, making sure that everything is accurate. Greg mentioned the NAICS code, and the ability for the NAICS codes that start with 7.2 to have 3.5 times instead of 2.5 times the average payroll. So we're actually seeing some errors come back on the NAICS codes with the applications that we're processing right now. So a couple things to just pay attention to is the initial application. Make sure you have that on hand, so that you can reference any of the information that you provided for your first draw loan, whether that be the NAICS code you used, your tax ID number, loan amount, loan number, those types of things will be asked for in the second application. So it'll be handy to have the documentation from your first draw available to you. And then a couple other things that are going on with this one. They kind of set it up in 3 different stages, and they rolled out the platform last Monday, the 11th, for the CFIs and the smaller financial institutions, in order to take applications on first draw borrowers that didn't take PPP in 2020. So allowing them to get in first, and then they started taking applications for second draw on the 13th, Wednesday. And then this morning, the platform opened for all financial institutions to process first and second draw applications. So if you didn't take one, then you would be submitting for a first draw. If you did get the first draw, now you're submitting for a second draw. Keep in mind that all of the funds have to be used or will be used by the date that the second draw is funded. So that's a requirement in there, that if you took the PPP round 1, that those funds will be used, or have been used or will be used by the time the second draw is funded. And then the other piece that's still in there is if you took a first draw loan and for whatever reason you went back and were able to recalculate the amount of the first draw loan that you were eligible for, there is a way that you can process that for additional funding. But that's kind of the high level on the application.
Ryan, you mentioned a little bit that the NAICS code is getting kicked out. In your experience with this, what are the things that kind of cause applications to get kicked back? Is there, for somebody who hasn't done a PPP loan in the first round, are there certain documents that, that business owners should instantly put together and have ready to go? And are there any of those that kind of end up kicking you out because you're missing something?
I think the NAICS code errors that we're seeing right now is that for whatever reason, they're different from the first application to the second application. So whether that was a typo in either of them and they transposed a number, but that, or, potentially there could be multiple businesses that are related. They use the NAICS code for one of the businesses on one of the applications. And in that first round, it just wasn't being compared against anything. And now that you have a second application with the same tax ID number and it's not matching up. So that seems to be the majority of what we're seeing.
And in that first round, there was a lot of troubles with the system, crashing, obviously with the new system and overwhelming demand for it. Are you seeing it being a little better now? It's opened up this morning and our application is going through a little smoother?
We are. Yes, the system, the platform that the SBA used in the first round was called eTran. It's a platform that they've had for a long time to process the 7A applications and other SBA lending products, and they tried to use that system to process the PPP round one applications. When they got to the forgiveness component, they opened up a forgiveness portal on newer technology that allowed them to use some of the better API systems and things that the technology companies and financial institutions wanted to use, but were clogging the system on the old eTran system. So for this round now, they have retooled the forgiveness portal to accept new applications, new origination applications for draw one, draw two, and forgiveness. And so that has significantly improved the stability of the platform, and we have not seen any sort of slowdown from the technology standpoint this morning.
Okay, Ryan, thanks a lot. I'm going to now toss it over to Sansi Blackinger, and good morning, Sansi.
Good morning.
Tell us about your expertise. Obviously, you work your boots on the ground, working with a lot of your clients and businesses for Central Bank of the Midwest. Kind of tell us about your experience through the first round and kind of what you're seeing now in the second round.
Sure. Hey, and also great information from Greg. Thanks for sharing all that. And then Ryan, I know that I think you're monitoring the portal as we are Zooming this morning. So way to multitask there. That's awesome. Well, most of my clients took the first round of PPP. There was uncertainty as to what the next few months would bring. Even clients with strong liquidity in the bank, they still applied and received the PPP. And then because of SBA's acceptance of either the 8-week period or 24-week period, at the beginning, Greg, it was just 8 weeks. They extended that. They changed the rules midway and said that you could use it over 24 weeks. All of my clients used it 100% for payroll, which actually makes the forgiveness part a little easier because we aren't collecting utility statements and that sort of thing. And speaking of forgiveness, it's actually gone pretty simple. The bank, we have about 50% of our PPP clients that have turned in the forgiveness paperwork already. And although it's not required, we're encouraging the second draw clients to turn in their first round forgiveness paperwork at the same time as the second draw application. As far as second draw, I don't expect the frenzy that we saw the first time around. I actually have about a dozen applications turned in so far. Our portal opened up this morning, like Ryan said, his did too. Fortunately, a lot of my clients had a great year in 2020, so they're unable to to show that 25% decrease in revenue in one quarter, 20 over 2019. And customers or business owners are smarter this time around, and they have more knowledge that they've gained over the past 9 months. For instance, a restaurant is applying for the 3.5 times, obviously, but because they have a deck with concerts in the summer, they're using that seasonality flexibility that Greg mentioned earlier too. And they're applying as a seasonal business this time around to maximize their potential PPP loan amount. And they're quite a bit higher than they were the first time, which will really help this restaurant out. And Greg, I don't know if you've heard this too. I've heard, I'm not sure they're true, some rumors that some businesses are holding off on revenue that they received in December until January. So they qualify for, so they can show that 25% decrease in revenue a quarter over quarter. And I would caution against this, of course, because you may be jeopardizing future loan requests with your lender, by showing that loss. So I would just be accurate and show what you actually did and be transparent. So
I was going to ask you about that second round, why a company wouldn't apply for that second round. And obviously it's based on that revenue decrease, correct?
right, that's correct. 25%. You have to show it 1 quarter of 20 decrease from 2019, 1 quarter.
Tell me about the issues you ran into in the first round of applications. What was the hardest thing for business owners to fill out on the application? Was there information they struggled getting, blanks they left unfilled? What was the hurdle for that?
I'm not sure on the application. I just think that there wasn't a lot of information right there in the first few weeks, or SBA would change their procedures on different things. So there was a lot of uncertainty in that first week. On the original application, it didn't ask for your NAICS code. It didn't ask for some different things. And so lenders would have to go back and look that stuff up and then put it into the portal. So there was a little bit, delay in processing that way. So I'm glad to see the SBA updated the application to include those things.
And both Central Bank and obviously Community America are two banks on this call who are, obviously can take applications, but is it better for an existing business to work with their existing bank if the bank is participating in the program?
Absolutely. Go to your bank. And I would think, Greg, have you heard of any? Most banks are participating in this. I have heard of a few that aren't, but do you have anything to add to that, Greg?
No, I would echo what Sansi said about that relationship. That relationship is very, very, very important. And many banks, for example, in the first round, just didn't have the capacity. Banks are businesses and have to take care of their own customers, and they just didn't have the capacity to take on new customers. So I would echo that. Use the bank that you have the relationship with.
One thing I would add to that, and I agree with the comment, is that the financial institution is able to process the application faster since all of the documentation from the first round we already have on file. So the SBA gives us that ability to take the second draw application with less documentation and review since we provided the first round.
And my guess is if you got turned down at one bank and you went to another thinking they would have different rules, it's pretty much all the same, isn't it?
It's pretty standard. I did hear this morning that if a business opened early 2020 or late 19, and Greg, you can confirm this, but if they show just even Q1 over Q2 2020, if they show a loss in Q2 over Q1, is that correct?
Yeah, I've heard the same thing. I've heard the same thing. And if I could, Tom, to go back and something Sansi touched on, I don't want to use the phrase, but playing games with accounting at the end of the year is not a good idea, is never a good idea, regardless of for a loan program or for, we've had a lot of clients, ask about changing tax methods. No, that's not a good idea in my opinion.
Well, let's open it up for questions from our attendees who are on the Zoom call. If you're watching us live on Facebook, you can post your question in the comments and we will pull it off of Facebook and read it. You can either open your microphone and ask the question. You can post it in the chat. Right now, I don't have any questions in the chat, but if you have a question and you're on the Zoom call, go ahead and unmute yourself and you've got the panel here open to your questions. So go ahead if you have something.
Can I ask a question, Tom?
Sure, go ahead.
It's Jody Krantz with Independent CDC. Greg, on one of the slides that you showed on the Paycheck protection, it said certain nonprofits are eligible. What does that entail?
So Jody, I haven't seen all of the final comments on that, but what I do know is that the business can't engage in any type of lobbying efforts or any type of obviously illegal activity. We're getting a lot of questions from businesses related to medical marijuana. Remember, that's still illegal on the federal side. You can't put federal dollars on that. But what I would say, I have seen many nonprofits get loans that I would not think were eligible. Our application is apply. The worst they can get is a no.
Okay.
But complete that package, because I haven't seen that detailed list of who can and who cannot. And I think that vagueness may be intentional, to tell you the truth, because in my experience, understand there were more SBA loans made during this pandemic than have been made in the history of the SBA. And I've never seen, I won't say a lowered standard of due diligence, but it really seems that banks and the SBA and everyone is doing their best to get this money out to make these loans.
Thank you.
Mhm.
Other questions? I'm not seeing anything. I might ask the question about the forgiveness aspect of the program. Sansi, maybe this is a question for you. For most of the clients you work with, did most of them get 100% forgiveness on that?
That's correct, 100%. And it's just really a timeline. SBA picks them up out of the queue and processes them, and there's really no rhyme or reason as to how they pick them up. Now, at the beginning, we did see the EIDL grant be subtracted from the forgiveness. And so now we're working through those. We have some that have decided to take payments and some that have paid that off in full. SBA says that they will refund the client or the bank, and we just don't know the timeline on that.
I think in the first round, the forgiveness process was a little convoluted, and they supposedly have simplified that here in the second round.
Yeah, and there's a couple different applications that are real simple. I mean, the forgiveness has been really streamlined. Very good. Very
At what
easy.
point
It's not overwhelming either. I've been telling my customers, because I think they're procrastinating with it. You spend 20 minutes and you're done. Trust me, it's very simple, and just get it off your desk and move on.
At
Yeah,
what
I
point do you
agree with
ask
that.
for the forgiveness? After that 8 or 24 weeks, is that kind of, you choose one of those two?
Yep. So we started asking for them, I think, November, maybe we started receiving them in. Ryan, I'm not sure when you started. And like I said, we're about 50% of the way, and really encouraging clients now to get those in.
Yeah, we saw a lot of people hold off on applying as they were waiting for to see whether or not they were going to increase the $50,000 simple forgiveness up to the 150. So now that they've increased that to the 150, there really is no longer any reason to wait. A lot of the loans are under that $150,000 threshold. I think the SBA looked at that and said, what line could we take to help the most businesses simplify this process and mitigate the risk of larger loans that they need to look at.
Okay. Greg, I know you've got to jump off for another call at 11 o'clock. He did post in the comments in the chat a link to the SBTDC website. They're a great resource here in our area. Carmen DeHart and her group at UMKC have done a great job helping businesses. So great resource. And no other questions, I don't think, from the audience. If not, we're going to thank our panel for joining us. Sansi, Ryan, Greg, thank you all for taking time out of your day. Always your resource for anybody that has questions after the fact. You can reach out to Ryan at Community American Credit Union, or Bob Glazer, who I see on the call. Bob will help you out as well. Sansi from Central Bank of the Midwest, and Greg Tucker from the SBDC here in Missouri. Thanks, everyone.
Thanks, everyone. Appreciate it.